So hello everyone, and I welcome you all to the third video of this channel. And in this video we are going to discuss about BTC analysis, current market analysis, and the ATR trade setup, which we are going to discuss in the end of this video, in which you will get a trade entry, stop loss, and targets for that. So let's jump into the video. And first of all, I will introduce you again to the ATR setups, which I have discussed it before in the first video, and it was a successful trade. And as you, if you, it is a long video, so if you have not been through it completely, I will just let you know in short what it means, how it works, and what it represents basically. So ATR stands for average true range, and it represents volatility in the market. What is the volatility has been in the market, and it just represents that only. And here we can see I have added the ATR indicator on the chart, and I have my levels on the chart. So what we can see is the market is ranging in between these two levels, the 8631 and 10110 level. So the market has been on it's a rough idea that market has been ranging in these two region. So uh, how we will see like how it works is at your setups it breaks the high, and since it has been ranging for almost 1 month now, so it is very hard to give a false breakout in case of this big ranges. It can't just go here and touch 10,900 and suddenly it drops down. So it is very hard to give a false breakout in case of these big ranges. But it is hard, but it has happened before. If you see here, in case of this, in case of this range, it has happened before. It just gave a false breakout and just shoots up all the way up. But like uh, these kind of movements happens not very often, and uh, we should stick to what happens most of the times. So now you know what ATR means, what it represents, and or how it works. So we will like ATR matures over time. So here you can see where it matures. Like whenever it is hitting the bottom of the indicator range, you can see it hit the bottom just around the resistance. It works in many different ways. You can use ATR in a lot of forms. Like here, if you can see, it was around the resistance, and it was basically a SR flip level, and the ATR hit the bottom around the resistance, and then it just dumps down, shoots down. And what you can see here is the ranging, or whatever the consolidation happened around these levels, and the ATR was at the low of the if you can just see, if you were about to take that trade, you can see the ATR was hitting a very low level around. So I have talked about this also in my earlier videos also. Like 100 range, a range of 100, you should consider it to be a lower factor for ATR or just market volatility of BTC. So every time it goes around the level of 100, it bounces back, it shoots up. So the next thing we will look at it is the range, how ranges works. So ranges works most of the time in a similar manner, it will form a range, it will break out to either of the sides, and it will come back to retest and then continues in the prior breakout direction. So in the again, in the most of the cases, not always, but in most of the cases, also ranges represent the large market players are building their positions. So like they just can't build the position overnight, you know. In most of the times they can't just build the position overnight. So what they do is they move the market from trending to a ranging uh, scenario. And as you can see, the market has been ranging. So what it does is uh, it like in most of the cases, it will either break upwards like here, and then come back to retest, and then just continues towards the direction of the breakout. Or even if it breaks down, it will come back to retest and then continues downwards. So in why I discussed it, like how you get to know like where to take the position is use the volume profile. Use the volume profile, and this is for like conservative traders and like you say the safe players, which will use these kind of setups. Like suppose you can see the volume has been declining since we entered this range, and the volume has been declining. And what happens is like even at the breakout, you will most of the times you will not have a volume breakout here. You will not have a volume breakout. So what happens is you will receive a volume breakout around the retest of either reason. If it breaks down, you will receive the retest here, and that is the confirmation. If the volume breaks out around the retest, then it is your confirmation that yeah, this is a proper retest and we should join the trend now. So we will look at another example of the similar thing happening in this scenario when we you know if in the May 2019 we were trending bullish and full on bullish mode. And what happens here is you will see we formed a kind of range. And what happens like if you see it, this was the high of the range. It comes back and retests some support levels here, and what happens is it bounces back and then comes back to retest around this region. And you will see the volume broke out here. It will not give a it will not form a new high on the volume, but it will certainly break out from the trend line, from the down degrading volume trend line. So this was the confirmation level for the uh, conservative players to enter back, get back into the trend. And from here you can see it just shoots up another 40% from here to here. So what I'm trying to tell you, like you can play it in many different ways. And uh, we will so you now understand how the ranges works, and why, what is the reason behind ranging market. So now we will there are you might be aware of the week of schematics. And so we will look at the week of schematics which can be applied in the current scenario. So let's look at them. So first scenario is reaccumulation schematic. So what happens here is you see it is forming a range, and then just breaks out a high, and then it front runs this low. And like many range traders might be willing to buy this, and but since the bulls are aggressive, they will buy it at a like somewhat a higher price, and they don't want to fill these guys also the buy levels, the buy orders, limit buy orders here. So they will just they have been accumulating from here to here, and now they will finally just front run them and continue the trend out. So this might be the case here also, but let's see if it has to happen, it should front run and bounce from 9090 level. And the other is week of a schematic which can be applied here is the distribution schematic. It is a very famous schematic, and you can see a lot of big profiles using this and publishing this in their analysis. And it can be also applied here. If you can see, we have passed the UT phase, and but the retest, or you can say the front run of the lows has not happened yet. And we have, if in the current scenario, we have just bounced from the midway and hitting the UTAD phase, UTAD test. So this phase can be termed as, if we have to represent this phase, it will be around 10,500 region. It will be here, and you can have the UTAD test around here, and then we finally break down. So these two cases can happen easily. And if I see any price, any price weakness around this region, I will uh, uh, I will be opening a short. And if I see any price support, price strength around the 9090 level, I will turn bullish. For now, let's move on to the trade setup which we are getting from the ATR. So what ATR is giving us is, ATR suggests is, go long once the resistance is broken, which is go long once the 10110 level is broken with a stop loss of 9379, and the targets are 10962, 12,317, and 13,561. So these are the three targets, and this will be the entry for in case the upper side breakout. Once the 10110 breaks out, you should open a long with a stop loss of 9379 and have these targets in play. And you can just move your stops, book profits on each level, and keep moving your stops, and you will be fine. So the next another trade which can happen in this ATR trade setups is this one. like uh, you see, in when once the lower support is broken, that is 86 8655, you enter short with a stop loss of the same level, 9381. And once the 8655 breaks down, you enter a short. 9381 is your stop loss, and the targets will be 7703 first target, and the second target should be 6823. And you should be fine in this, in any of these trades. Depending on the situation, whatever happens, you can take the two trades. So that's all for this video analysis, or whatever you say, market update. And we will see you soon in the next video. A subscribe will be highly appreciated. Drop down a like if you find this video useful. Thank you very much.